Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, welcome back. It has been quite a busy week here in crypto. If you missed it, the U.S. government officially shut down yesterday. The SEC, because it was the end of their fiscal year, ended up putting out a bunch of notices yesterday, including advocating that all stocks should go on chain, clarifying some information around the custody rule for crypto, and a no action letter was released from relating to 00, a DePIN project's launch and distribution of tokens, claiming it is not technically securities. So a lot going on. In other news, Cloudflare announced, which is like one of the biggest internet service providers, they announced that they're going to be launching a stable token. So has a bunch of other smaller groups, also Phantom, the wallet. But we'll get into it. We have lots of tokens to discuss, as always. So first up, we're actually going to talk about Plasma. So if you are not familiar, Plasma is a new issue launched this week. So they launched last Thursday. Their stablecoin layer one. They're a stablecoin layer one protocol backed by Tether. They had this long-awaited mainnet that launched this last week, along with their XPL token. So users were actually able to pre-deposit assets into Plasma back in June in exchange for earning early XPL rewards. The idea was that getting pre-deposits prior to launch was a good way of showing that the protocol could produce yield for those who deposit in the protocol in the form of stable coins. Typically, we see a lot of capital, though, leave these ecosystems, especially post-launch. But in the case of Plasma, their TVL has actually massively grown upon launch and now sits at about 13.5 billion, making it the fourth largest chain by TVL currently. That's massive if you aren't really aware. This explosive growth is really due to a massive amount of XPL incentives that the protocol plans to hand out. With the day, and also on day one of the launch, there were a ton of DeFi apps lined up and launched on the L1, including Aave, Athena, Fluid, and Euler. They also expect to add other big DeFi apps like Pendle in the coming days. Plasma also has some exciting catalysts ahead of it, including the launch of its neobank Plasma One, which already has a ton of early signups. So unfortunately, XPL is not immune to what has been going on in the market. After launch, they traded up almost 100% from a rough listing price of around like 88 cents, 89 cents. They traded up to $1.67 and then have since retraced a lot of that, being caught up in a lot of, like I said, the market malaise. It is now down 5% technically since launching. Okay, next up, we have a double. We're going to talk about Morpho and Uniswap. So yesterday, the French bank Société Générale, their digital asset subsidiary called SG Forge, launched stablecoins through both of these DeFi protocols, Morpho and Uniswap. So the stablecoins, which are EUR-CV and USD-CV, are pegged to the euro and US dollar respectively. These are now available to be borrowed, loaned, and traded within the Ethereum-based DeFi apps. So Société Générale is not really doing much new in terms of stable coins. They join a lot of other institutions like dabbling in this space. And literally just in the last week, Visa, JP Morgan, Swift, and Citi have recently announced testing. But for them, a lot of them, they're actually within their own walled gardens or their own, ecosystem projects. This is really interesting because it's probably one of the first times we've seen, or few times we've seen, a traditional app player actually dabble in on-chain DeFi that doesn't have, some sort of kind of like walled approach for them, and actually seeing assets deployed in that method. So hopefully this means more adoption to come. Definitely exciting times ahead. Morpho is up about 5% for the week, and Uniswap is down 40 basis points for the week. Okay, next up, we're talking about an old project here. If you're new to crypto, you may not have heard of this, or you may be like, "Why is this relevant right now?" But Yearn Finance, they're one of the original DeFi projects of 2020 of DeFi summer. They released a proposal on Monday to completely overhaul their DAO and their Wi-Fi token. So if you're not familiar with Wi-Fi or Yearn Finance, they're kind of like an on-chain yield optimization protocol. The idea is that you can deposit your stable coins into their protocol, and they will figure out where within DeFi to allocate your assets that are going to have the best return for you, and then they take a cut of that. So they've unfortunately struggled to remain relevant in the last couple of years, especially with the launch of newer DeFi protocols, and they've had a lot of inconsistent leadership. And as always, they have suffered from the problem of DAOs being slow moving and kind of not as nimble as more centralized organizations. The first part of the proposal actually restructures the DAO's operations, the goal being to make it more streamlined, require accountability for the individual teams, and also slashing a lot of expenses. The second part focuses on changing Wi-Fi's value accrual mechanism from a vote escrow model. So this is the vote escrow model we've talked about in the past. This is where you agree to lock up your tokens for a certain amount of times, usually up to 4 years. Minimum can be a couple months, but usually the 4-year max lock is best for users. And they essentially get more rewards they get while locked up in this vote escrow account. They can vote on, kind of which pools or which areas the business receive the most amount of revenue or rewards. And then they also receive the most amount of rewards for being locked up and voting in those vote escrow contracts. So this model has become pretty popular in DeFi. Curve popularized it. It's used in a bunch of different places. But they actually decided that they're going to move to what's called a staking model, calling this new, not VE Wi-Fi, but ST Wi-Fi. So in the new staked Wi-Fi model, about 90% of protocol revenues are going to be returned to stakers in the form of yield-bearing stablecoins. These are Yearn's yield-bearing stablecoins, to be specific. And finally, the proposal includes a provision to distribute more Wi-Fi rewards from the treasury to stakers. So these are just not uncommon changes to see these days. A ton of older projects are trying to remain relevant right now by making changes, by tinkering with their token model, et cetera. So it's a lot of tokens are trying to fight for attention. There's just so many more tokens on the market than there were back in DeFi summer. So it's kind of too early to tell if this will have a large enough impact to bring Wi-Fi back to relevancy. To give you context, Wi-Fi is down 93% from its all-time high price of $82,000 roughly. But this week's news saw Wi-Fi gain 5.9% week over week. All right, last token I have for you today is Centrifuge. So Centrifuge is a tokenization platform specifically working to bring what we call RWA or real world assets on chain. Last week, they launched their newest product called SPXA, and it's going to be an on-chain S&P 500 index fund. So I know we've seen a lot of these, but there's a key difference here. Unlike other projects or other S&P 500 indices in the past, this one is actually licensed through a partnership with S&P 500 Dow Jones indices. So it's not just that they decided they wanted to create a tracking indice. This is actually created in conjunction with the group that creates the indices. So the hope is that over time, this will actually get much more liquidity as it is a kind of, stamp of approval official product. So like I said, the SPXA, is live today on the base layer 2. It is only open to accredited investors, but there's the potential that it could become tradable within DeFi in the future. The new fund joins 2 other recently launched funds from Centrifuge, called JAAA and JSTRY. And we're seeing a lot of this as traditional asset managers explore ways to tokenize assets on chain. Finally, Centrifuge's token, CFG, was also listed on Coinbase last week. Centrifuge, if you haven't been following them, they've experienced tremendous growth this last year, following a pivot of the business in March. Their TVL has grown from 70 million back then to 1.2 billion today. And Centrifuge is up 11% for the week. All right, guys, that's all I have for you this week. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.